Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Monday, June 16th, 2025. Let's take a look at the charts. I will start with the big picture. This is a weekly bar chart going back over 5 years. It was the low 350s several weeks ago we topped out at. That had actually been an objective several weeks earlier. 351.39, 50% upside retracement. 353.69 is this former 2-year channel top that still has relevance as a technical resistance level, a ceiling of resistance, and an upward pivot point into later year. If we were to push through and close any weekly session Friday afternoon above 353.69, we enter a long-term buy signal that should ultimately yield 516.05, possibly by the end of the year. But that didn't happen. When we tested this area, we pushed through it. We did not close above it on a weekly basis, and then we proceeded to fall away to the 3-month channel bottom at 291.65. The feud between Donald Trump and Elon Musk certainly helped in reaching this objective much sooner than the 2 to 3 weeks that we were anticipating, but nonetheless, 291.65 is your near to midterm support, able to contain selling into July, and above which we have a rebound rally that we are anticipating that is likely to continue playing out into the low 350s, 351.39 to 353.69. Now, on the way up, we have topped out roughly at 331.61. That is a 5/8 upside Fibonacci from that high 2 weeks ago to the low about a week and a half ago. And maybe this is 3 weeks and 2 weeks. Either way, 331.61 can continue to contain daily buying pressures, and below which we can, by the end of next week or sooner, retest 291.65. On the other hand, if we close today above 331.61, I give it about a 1 to 3 day rally before retesting 351.39 to 353.69. Where if you're a 2 to 3 day swing trader, you can take profits above 331.61. Maybe you bought the market a week and a half ago when we tested 2 days out of 3, the 291.65 channel bottom, and you're holding out for the low 350s, solid profit taking zone on a decent trade off this channel bottom. Once we test the low 350s, we can fall back within a couple of weeks to retest 291.65. We could fill this wedge out for the next few weeks. But once again, if we close Friday, the week itself, above 353.69, we have a long-term buy signal. This is investment grade buy signal, if you will, 3 to 5 months to 516.05, 5-year channel resistance, able to contain buying through the rest of the year and possibly well into next. But not worth really going into all this unless we close above 353.69. Until then, we can fall away again. In fact, let's go back to this channel bottom. The channel bottom remains in reach again, as I say, by the end of next week or sooner, below 331.61. And on the way down today, we have 309.31. That is the Fibonacci from 3/8 Fibonacci from the April low against that recent high in late May. It can contain intraday selling. I'm not a big fan of buying it on a 3 to 5 day time frame as a swing trade. But I do like it as a day trade. If we close below 309.31, that would set up 291.65 within another day or two. And as I said, holding below 331.61 will keep 291.65 in reach again, perhaps, over the next week or two. We just don't have a clear signal for that unless we close below 309.31, say, today. 291.65, we have and are now officially decoupling it, if you will, from the 272.87 5/8 downside Fibonacci. That is a 5/8 from the April low against that May high. In other words, if we close below 291.65, I see that as the go with sell signal. So if you bottom pick 291.65 and we wind up closing below 291.65, I would suggest that you exit any long positions below 291.65. And that is over the next 3 to 5 days, 2 to 3 weeks, and even 2 to 3 months. If we close below 291.65, we have not updated this chart yet. We should here in the next day or two. I still have 272.87 as the down pivot. And it was considered a range, as you might recall, a week ago when the two were very close to each other. But I'm not a big fan of staying long Tesla below 291.65. In fact, I think it's the aggressive short play. as we move into July trade. Now, of course, we could bottom out at 272.87 for a day and possibly longer. There is the very real possibility that we bottom out here into July. And so, if you wanted to wait for a settlement below 272.87 before aggressively playing the short side into July, August, I have no problem with that. As I said before, there is a scenario where you buy 291.65 on weakness, holding out for the low 350s within 2 to 3 weeks. If we close below 291.65, you exit your long position. When should you go short over the 2 to 3 week or longer time frame? It could be a settlement below 272.87. That is still valid, but I tend to be more aggressive in trading and analysis, and I do think that it's worth setting a short with a settlement below 291.65. You're going to have some hesitation at 272.87, but we could, within a day or two of closing below 291.65, violate 272.87 as well, which would set up 221.86 as a 1 to 2 week target. I'm going to say that closing below 291.65, you've got 221.86 as a 2 to 3 week objective anyway. So your 2 to 3 week time horizon, buying 291.65 and selling the low 350s, or selling a settlement below 291.65, anticipating the low 220s. As I said earlier and have been saying all along, if we close below 291.65, I think you can play the 2 to 3 month sell signal into the 160s, the 159.95 to 166.05, 5-year channel support, then anticipated within 2 to 3 months of closing below 291.65. I think that's an aggressive down pivot, pretty classic rising channel bottom at the bottom of a move, solid sell signal.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
And I think you could opt for the 160s. Now, how do you play that? If you're an options trader and we close below 291.65, you may consider reaching for 160, 165 strike out of the money puts that don't expire. I'd go 6 months out on that expiration. I think that's a 2 to 3 month play to the downside. If you're a near-term options player and we close below 291.65, you might reach for 220, 225 strike out of the money puts that don't expire. I'd go 4 to 6 weeks out on that 2 to 3 week downside play. As we're testing 291.65, options traders might reach for 350 strike out of the money calls that don't expire for 4 to 6 weeks on that 2 to 3 week upside play. And finally, in terms of the option strategy, if we close above 353.69, you might reach for 515, 520 strike out of the money calls that don't expire. I'd go a full year out on the expiration, even though I think this is more of a half-year play to the upside. Last week, we put out 2 stock picks, wickedstocks.com did on Danaher Corporation. I think I pronounced that right. Lamb Research. The previous week was Tempest AI, Adobe Systems, Dana Holdings. They're all still relevant. You can see them all for free by going to wickedstocks.com and taking advantage of our 5-day free trial. With that, you'll get daily Triple Q and daily SPY analysis. Just like you see in Tesla, every day we do daily Triple Q and daily SPY, as well as weekly Apple stock analysis on a week by week by week basis. Check us out at wickedstocks.com. I'll be back tomorrow, of course, with Tuesday's Tesla report. You have a great day.